it's Algo here. I'm going to be going over the inverse fair value gap statistical model using the OHLC and session stat map indicators by @_JoshU and @2degrees on Twitter or X. So this model consists of an OHLC stat map level being hit, a session stat map level being hit during a macro time, with an entry function, the inverse fair value gap, and market structure shift being used. So once this happens, we will use opposing stat map levels as targets. So moving on down here, we have the types of different inverse fair value gaps. We have the bearish one over here to our left and the bullish one right over here to our right. So I would like to see a closure like this that validates the inverse fair value gap and validates a market structure shift. Same thing for the bullish side. I would like a closure that validates the inverse fair value gap. Moving on to the settings. So over here, I have 2 OHLC stat map indicators on and 1 session stat map. So for the first one, it's just going to be for my daily levels. As you can see, daily, 1 day, I have the open, manipulation, and distribution on. Calculation look back set at 60. Calculation method, median, and at points. For the second stat map OHLC indicator, I will be using this for my monthly and weekly levels. And for the calculation look back, it'll be at 60, with the method being mean at points. For the session stat map settings, I have the 8:30 to 11. I don't have the open on for this one, but I do have the manipulation and distribution, with the calculation look back being at maximum, with the method being at median and at points. Going over to the right, we're going to go over how to set up the stat map alerts. So first off, you're going to go ahead and check out your indicator list. Right over here to that right, you'll see the 3 dots. It'll say more, and go ahead and click that. This section will pop up. The very first one will say add alert on OHLC stat map indicators. You'll click that, and then this will pop up, and then you will click create. So I'll go ahead and do that live now. As you can see over here, I'll go over to that 3 dots. The more will pop up, click it. Here's add alert. We'll click this, and this section will pop up, and then you will just click create. This will work on pretty much all the 2 degrees indicators that have alerts available on them. Okay, so now we'll go over to the charts. This is going to be a quick one. So we're going to wait for market open. Right now it's at 9:10. We have 9:30, so market's now open. Now we have a daily OHLC level hit, a session stat map level hit, and also a monthly manipulation session hit. So from here, we're going to be looking for our entry function, and it seems like we have one right over here that could be validated, so I'll go ahead and highlight that. I'm going to make sure it's going to be during time, but let's see if it gets validated first. And it gets validated. So from here, we're going to mark out the time, see if we're in our macro, and it looks like we are. I'm going to mark this out for the 10 a.m. macro. And from here, we could enter, or I will enter the position right there. So some will like to put it at the swing low. I like to put it right here in this wick. 50% of this order block. It's really up to you and your risk tolerance. It will vary for every trader and how the setup looks and however you're comfortable with. So from here I will target opposing stat map levels, and there you go. So I'm not saying it's going to go all the way up here, but these are the levels and this will be the max pull of it. So what I will do is, as price gets to these levels, I will watch it, see how price reacts to these stat map levels, and adjust and manage my trade accordingly to that. So we're going to go ahead and let price print, and then boom, you would be entered, or I would be entered, and you can see price move up using that inverse fair value gap, that bullish one, during a macro time. And as we can see, price continues to launch. With all the levels being hit for the day. So at this point, I will call this a day, just because there's no other levels up there besides these. But these are pretty far away, so at this point these would just be left for runners if I had runners. And we're going to let it play out and see what happens to market close. Alright, market closes right over here, and as you can see, price just went ahead and just ranged into these weekly and daily manipulation levels. So this was a great bullish inverse fair value gap statistical model example to the upside. So we're going to go ahead into the next day. I'm going to select 9:30 or 9:15. Alright. So we're going to wait for market open at 9:30. Right here, 9:30 candle. Alright, so now we have some OHLC levels and session stat map levels hit. So during this time, we would just wait for our entry function and time to line up. So this would be the first one. As you can see, price continues to move up. And it looks like we have a big one right over here that gets validated. So now we have a bearish inverse fair value gap that gets validated. Let's see if it's during the right time. And it looks like it's during our macro. And this is going to be the 10 a.m. macro again. So over here we have a weekly manipulation level, and we also have a session distribution level. So we're going to see the short tool, and we will enter. When it pops back in, you could use this level as a stop or the high, whatever you're more comfortable with at this point. And we will target opposing liquidity levels, which are down here and down here. So we're going to let price print, and as you can see, we are entered right here into that inverse fair value gap. Price drops and hits our first level down here. So at this point, this is where things kind of seem like they're getting sketchy. And this is what I meant about watching price when it hits these levels. So we'll let price continue to print. And as you can see, we get a nice range over here, kind of choppy. Looks like we have an inverse fair value gap over here as well down here. So at this point, I would be looking to stay nimble and cut my trade when it needs to be, or cut it right here at the manipulation again if it lets me, or if it comes back to it. Oops. We'll let price print. Oh, and as you can see, price does hit this low over here. To me, wicks love to get bodied eventually, right? So nice bearish example, and it was a great example as well to see what we were just talking about previously on how we should watch the levels or watch price as it hits these levels. Just because we hit this distribution level doesn't mean it's always going to careen up. We still have to watch our trade, manage ourselves, and manage our risks. So we have a nice bullish example and a bearish example of the inverse fair value gap statistical model. So we're going to go on to our next day. And we're going to pick 9:15. And we're going to let price print. So we have 9:15 right over here. We've already hit a sessions distribution level, weekly and monthly open. Excuse me. With a daily distribution level hit. So we already have an OHLC, well, multiple OHLC levels hit with a distribution session level hit. So from this point, I will be looking to look for my entry function. So as you can see at this point, we have one right here that could be inverted or inversed. I mean, another one over here. And this one up here. Sorry about that. OCD, as they would say. So we will let price print. And at this moment, our first inverse fair value gap gets validated. We'll go ahead and enter here. Once it's validated, and as you can see, it pops right back in here. We're going to use the high as a stop, and we'll target opposing liquidity levels, stat map levels. And we'll let price print. And as you can see, price continues to go down. And eventually, continues to range in this area and eventually closes back up. So this is another great example of a bearish inverse fair value gap model, and another great example of watching these levels when price hits it. So as you can see, price went down. You get a nice consolidation or range. Price pops back up and then moves back down and continues to go back up to retest these highs. So that was a great example of the week, first week of October. As you can see, nice plays, 1, 2, 3. Touching on these type of days, why I didn't really touch on this, because on trending days, in my opinion, the market likes to use these levels as continuation levels. So as of right now, I'm still collecting more data on how to get more comfortable or what to look for when it is a trending day. So far, I just realized I need to identify if it's going to be a classic buy or sell day, and then if I could do that, I could go ahead and use these levels as a continuation level during trending days. Alright, so let's go ahead and let's review Friday's price action. Very nice. Friday, 9:15. Alright. So this was last Friday's price action. You can see price move up. Price is printing. Price opens up right here, 9:30, big candles up. So like we were saying, just because price hits an OHLC level or a session stat map level, like hits a combo with our model, doesn't mean we're just going to enter. We need to see our entry function appear during a macro time. So we're just going to go ahead and let price do its thing. And as you can see, we have a potential inverse fair value gap right over here, but no validation. We have another one over here, but no validation. So this is pretty much how I'm watching the market as it's playing out. I'm just waiting for my entry functions to get validated during the right time, and then that's when I will enter my trade if the right criteria are hit and if the risk is acceptable to me. Alright. So as you can see, price was going down here. It did not validate that inverse fair value gap, and it continued to push, so no entry. Oop, we have one over here. So this one I did play with options. We went ahead and shorted. It was a pretty nice day. And then boom, wick. Now finally get that close. So now we need to wait to see if it's during our time. So let's see. So our 10 a.m. macro, let's see what happens. So it looks like this one wasn't in our 10 a.m. macro. And we might have to wait for the 11 a.m. macro, right? So let's mark out the 11 a.m. macro. Boom, boom, boom. And then from here, since this is the zone of the 11 a.m. macro, I will enter there. And then I will target opposing liquidity levels, right? So I'll let price print. And we are entered right there. 10:45 during the macro. Price prints. And then like I said, once we hit these levels, we should be watching price. And then there it goes. Price continues down. We hit the weekly opening. And there we go. So it looks like we hit this manipulation session level. Oh, and it looks like it went to a different day. There it is. It looks like we hit the session manipulation level and the weekly open. From here, we can see price hit it, go down, and then range from there. So at that point, I would have cut my trade and then call it a day. So I hope you guys liked the video. Sorry if it was a bit confusing or anything like that, and if it was too quick. Please leave comments, like, share, subscribe. Any constructive criticism is always welcome on how to make the videos better, and thank you again for watching. I really appreciate it, and have a great day and good trading. Bye.